Before I learned about value investing, I believed that I bought a ticker. I'd buy a stock, but it'd be a ticker. I used to believe that when I buy real estate, I'm just hoping for real estate values to go up. I didn't know they would. I didn't know how to figure out a way to generate my own returns, right? Then I learned about value investing. Then I started buying real estate and realizing I could put money in my properties to make them worth more money. How? Not putting a roof on, which can still help your value, but rehabbing units. When it came to a stock, being patient. Three most important parts of being a successful investor, no matter what you're buying. And this is really bothers me, Mo. Like when people tell me like, oh, I'm a real estate investor. Oh, I'm a stock investor. No, you're just an investor or you're not.
You can invest in literally anything if you have the right mentality and understand.
These three things are just what you need to invest in anything. Are you telling me right now that if Warren Buffett became a real estate investor, he'd be a bad real estate investor?
No, he would know what he was doing.
He just has to deploy tons and tons of capital, so he can't do it in real estate. And there's a lot more manpower and work that's involved in owning real estate. So the first thing is emotion. You have to be able to do analysis in a company or any investment, believe in it. And if the market goes down, you have to understand that either your analysis is wrong, which you verify, but if the analysis you still believe is correct, don't be affected by the market going down. If you don't have the right temperament, I don't care what degree you have. I don't care where you went to school. I don't care how much you understand math and numbers. If you don't have the emotional ability to sit there and see a stock that you like going down and buy more of it or not sell.
We see a lot of people with Harvard degrees, Ivy League degrees, and they don't have the emotion to do this and they don't generate returns.
Exactly. Look at every mutual fund out there.
You can know all the stuff you need to know in the world.
Look at all the mutual funds out there. Actively managed mutual funds over I've seen varying data that says over a 10-year period, it's between 92 and 98% of actively managed mutual funds do not beat the market.
And who manages those?
And who manages those?
Ivy League grads.
Mostly all these big shot people.
Yep.
Markets go down and stocks go down for many, many reasons, right?
Mm-hmm.
We've seen in history, crashes occur. The hard part though is when the market's going up and your stock is going down.
I also think it's hard for, if you're looking at it and you're looking at a company like Tesla and all of your friends are making money in here, you have to have the emotional discipline to say, I'm not going to chase this.
Yeah.
It's not going to go up forever.
It's FOMO, fear of missing out. Now, back in the day, I had immense FOMO. I was upset if somebody else found an investment that I didn't find and it went up a ton. Now, I actually like avoiding those. I like avoiding the ones where the average person is making a ton of money because I just don't believe that's entirely possible for a long period of time.
And more likely they're not going to keep it.
Correct.
Because we've seen it with our own friends.
Oh, yeah.
It goes like this, and then they say, oh, yeah, I sold up here. No, you didn't. You still haven't sold down here.
Well, no, what they say is this. What they say is this. It goes up like this and falls, and I tell them, hey, that's a great investment. They're like, oh, I sold it before. When? Crickets. Oh, got it. Nice call. Just want to make sure. Listen, you look at all the best investors of all time, they don't have years when they make 100% a year for like 5. That doesn't happen.
It's not possible.
Well, it's possible.
It's not going to last an entire career.
Correct. Now, Warren Buffett does believe if he had like $1 million today, he'd make 50% returns a year. Maybe he could. I don't know. Maybe he probably could. He's a really smart man. But the point is, you can't chase these things. He's trying to make good investments all the time and sit in cash. Now for you, you don't want to sit in cash because you probably have a retirement to hit. He's got billions of dollars, tens of billions. It's a little bit different. The second important attribute is mindset. Mindset are the thoughts that go along with your emotions. So if your emotions are up and down, your mindset might be stocks are going to zero. No. That is not what you want. You want the right mindset of the long term. What you're doing is the right thing. Things will rebound. Things will get better eventually. This is why it's so important in the community. Like in our community, we have thousands of people in here talking, and it's routine that when a stock we love or they love goes down, they sit there and say, what am I missing here? And sometimes people say, I don't think you're missing anything. It's just Mr. Market has said your stock isn't worth as much.
Yeah. It's absolutely amazing. Every morning when I do the morning show, stocks are either up or down, and people love the red days. And you don't see that on many YouTube channels.
Think about that, guys. We love the red days.
They're like depressed on green days.
Look at this. I was excited because we were making videos this morning, and I looked at Mo and go, Mo, look, NASDAQ's down a lot, 1.5%. He's like, oh, nice. I was excited about it. That makes me very excited. Green days actually upset me. Well, they don't really upset me. It's just part of the process. But I love red days. To me, mindset is about looking at the past and saying, okay, I'm positive about the future. I'm positive about what I'm trying to do here. I understand what the goal of a good investment is. And I'm going to couple that with the emotional side to sit there and say, I believe this. I'm going to do this. And my emotions are intact to be able to allow me to implement that, right?
Yep.
Third thing is process. Now, why is process the last one? Well, guys, if you have the right emotion and mindset, just buying long-term ETFs, you will do a great job and you'll beat 98% of active money managers.
And that's a great process right there.
And that's a great process in of itself. But if you want a slightly better process that allows you to use a portion of your money to buy individual stocks, and you couple that with, my battery's running low. If you couple that with the proper mindset and emotion, that's what makes you Warren Buffett. Warren Buffett is amazing because he does all three. He has amazing process, but he mixes that with the right mindset and the right emotion. He doesn't get emotional about stocks. He looks at a stock and goes, oh, it's down? Great, I want more of it.
Yeah.
That's the amazing
exactly
part.
Right. That's exactly right.
You know,
and he looks, I'm going to use crypto, for example. Crypto skyrockets. And he literally said, if you could sell me crypto,
all the crypto in the world
for $25, I'm not doing it.
He said, if you offered me all the crypto in the world for $25, I would say no.
Doesn't align with his process.
Yep. He doesn't understand it, so he avoids it. Any company he doesn't understand or investment he doesn't understand, he avoids. And that's part of the process. And that's what we teach on this channel. We teach all three. And when I first started this channel, process was most important to me. But as time went on, I started interacting with more and more people on YouTube. I started to realize, oh my God, mindset and emotion is the most important part. So think about that, guys. This channel is not very old, and I just recently realized how important mindset and emotion are. They're the most important aspect.
It's the mindset that separates us. Yes, we have a very different process from everybody else, but we could have a different process than we have and have the same emotion, and we would probably do very well because we have that emotional control.
Correct. When stocks go down, I'm like, this is wonderful. I'm going to buy more at a certain point.
Yeah, of course.
Now, I don't think the stock market's where it needs to be. And I look at the emotional responses from people, and I'm like, we're not to the bottom yet. And that's the big part of this channel: emotion, mindset, and process. If you want to get better at all three, this is the place to be. And we have a risk-free offer. Sign up today for $1 a day. You get 1 month. If you don't like it, for some weird reason, if you don't like it, email us. 100% of your money back, no questions asked. Thanks very much, guys. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?